Hello, everyone. We are back for another Prospero.Ai stock market live stream. Like up the video before we get into today's topics. Let me say that nice and early today, get it out of the way. We have the markets looking a little tentative today. Not a lot of movement in the overall markets, although we have some stocks moving a lot, which we'll get into throughout this stream. Right now, the QQQ, SPY, and Dow are all within a tenth of a percent of the even line for the day, so not a lot of movement overall. I'm going to take you through some of the topics, and then I'll be joined by George, and we'll discuss those topics in detail. Before, at the end of the stream, we're going to be going into the model portfolio and updating our positions live on stream for you guys. So stick around for that. But without further ado, let me go through some of the topics that we are going to be discussing today. So starting off, we're going to talk about Southwest Airlines, which made an announcement negatively affecting the stock this morning, although it's recovered slightly throughout the day. We're going to talk about what that announcement was and why they made it, perhaps. And then we'll get into YouTube, which has been killing the streaming game. There was a study done that showed them as the leader in viewership, and with Netflix behind them in the number 2 spot. So we'll discuss what that means for both of those companies, but then also Disney was mentioned in this story, and there was an interesting tidbit about them. So we'll talk about what that was and what it means for Disney Plus, their streaming platform. Then we had a stock that was up over 50% in the overnight hours. Rivian, which is an EV company, announced a deal with a major car company. I'll let you know which company that was and how much the deal was for. But it was up over 50% this morning. Last I checked, it was giving some of that back throughout the day, but I think when I checked, it was still up over 25%. So I want to ask George, are there many more diamonds in the rough out there? Because Rivian was a stock that was downtrending for a long time, kind of maybe forgotten by most investors, and popping like that's pretty crazy. So are there other small cap stocks? We know the small cap sector, the Russell 2000, 3000 has been underperforming over versus the overall markets for a long time now. So maybe there's other stocks out there like Rivian that are just waiting for that news story to get them back up on the uptrend. So we'll discuss that. And then we're going to talk about a story where if you guys pay attention to market news on a daily basis, you probably saw this about a month ago where Berkshire Hathaway stock, there was a glitch and it was showing up as down 99% for a very short time. Excuse me. And Interactive Brokers had an announcement today based off that event that happened. I'll tell you how much money they lost. And it seems like some people were able to take advantage of the glitch of the share price on their platform. So we'll talk all about that. Next story, we have McDonald's launching a $5 meal this week. It seems like there's going to be a price war in the fast food industry. The food industry was one of the pieces of the economy that had the most inflation over the past couple of years. So it seems like there's going to be a competition to see who can get their prices back down now that we're in a different landscape in the economy. So we'll talk about what that price war means for McDonald's and maybe some other big fast food businesses. And yeah, why would a company even want to enter a price war? Who does it benefit, and what are the outcomes? And then our final story of the day, we will talk about the end of the first half of the stock market is going to be Friday. Monday starts the second half. So we're going to discuss if that means there's a lot of cash that's going to be repositioned before that, what kind of themes we can expect for the second half of the market. Is it going to be like the first, or are we going to see a different environment, and what that means for you as an investor and managing your portfolio? And then, like I said before, we will get into the model portfolio update. What I like to do now is update you guys on where the QQQ and the SPY net option sentiment is when we start off the stream, and then we'll check back in on it later and see if it changes throughout the stream. So right now, we have the QQQ at 54, which is at a bullish level, even though the QQQ is now down 0.11% for the day. Not a lot of movement today. It seems like the markets are trading pretty cautiously, but let's check out the SPY as well. Okay, so we have the SPY net option sentiment at 46 right now, slightly below the QQQ. The SPY is also down 0.09% for the day. So both are negative at the moment. So we'll check back in at the end of the stream. Maybe the markets will both be positive and maybe those levels will be changed. Let me see who's in here right now. Do we have any regulars? Joseph, Wolf. Let me try to think of some of our regular viewers. I forget the name of the person who was commenting on Monday. But let me see in the chat who's here right now. I see we have 50 people that have tuned into the stream so far. If you yes, Joseph's here. Joseph's already here. Thank you for supporting us, Joseph. We're so happy to see you here. If anybody's here, also besides Joseph, who was here on Monday, we had some technical glitches with the camera. We were off last week and we were just getting back into the swing of things. So I think George is testing everything right now to make sure that the camera situation is set up and ready to go. But he should be in here any moment. If you guys have any questions for me, maybe I could answer them before George gets in here. Also, if you have any questions for George, feel free to comment them right now and we'll have them ready to go for when he comes in here. We always love addressing everything that you guys most want to know. So besides the topics that we come to the stream with, we're so happy when we get questions. So feel free to comment away right now and I'm sure we'll get to all of them. Let's see. See if there's anything I can highlight for you guys happening in the markets right now. We have crypto dropping today. If you guys are regulars, you know George isn't a big fan of crypto, but I try to sneak it in on the streams as much as I can. We have it down today. Bitcoin is down 1.8%. Ethereum's down 1%. So a lot of Bitcoin miners are down. Check out the Russell index. The Russell is down 0.5% today. So small cap stocks, even though we have the Rivian story we're going to discuss later on, still stuck in the mud, it would seem. I think the market might have been slightly disappointed by the NVIDIA meeting today. NVIDIA is down 2.2%. So maybe that's why we're seeing the overall markets kind of trading sluggishly. I saw a crazy fact from an account on Twitter, Heisenberg. It's a good follow if you guys like to follow people on Twitter. He posts a lot of good content. I believe he said that with every 4 cents that the NVIDIA stock price moves, it's now equivalent to $1 billion, which is just absolutely nuts. And we have George joining the stream. Hello, George.
How does the picture look? I was like fiddling around with it a little bit. Is it look in focus?
It does. Let's get my screen nice and bright. Yeah, it's looking good today. Nice shirt.
Good. Well, I also switched to a wired connection, so that's a big thing.
Oh, now it is lagging on my screen. Darn.
Yeah, this one, I mean, it's not showing me the internet problems this time, but there's something, I think it's something with the camera. I'll try to rejoin.
Okay.
God damn it.
No worries. And it's just me and you again, chat. Your favorite Prospero.Ai co-stream host. Oh, you know what I wanted to mention today? This is kind of the value that you get from these streams if you're a regular viewer. We called out FedEx on how how it entered the Prospero.Ai homepage on Monday because it had earnings and it was looking bullish based off the signals, and FedEx stock ripped off their earnings. So hopefully, if you guys saw that, you're able to take advantage of it. If not, it's always good to scan the list of the Prospero app. If you haven't downloaded the app, what are you waiting for? Do it right now. You can do it while you're watching the stream. But on the homepage of the Prospero app, you have short-term bulls, long-term bulls, short-term bears, long-term bears, and they update every 3 minutes. Not all the stocks are changed because some of them, maintain with the signals that will keep them on the list. Um, but those are just good stocks to keep on your radar.
Okay. Are we doing this better?
Let's see. You're still looking a little laggy, but your audio is good. The picture is also clear. It's just like laggy.
Yeah. I don't know what's going on. I think we might just have to switch to the other setup and do it there.
All right.
I don't know what could possibly be going on. All right.
George is going to enter the laboratory early today for everybody so George is going to switch over to where we do the model portfolio update. Usually he stays on the good camera for the first 3/4 of the stream before the switch over, but today he's going to do the full stream from the laboratory, so we won't even have to switch over later. We'll be ahead of the game on that. But until George joins back in, what was I saying before he joined us? Oh, the lists on the Prospero app homepage. I hope you guys are taking advantage of the stocks that pop up on that. Like I said, it updates often. I think it's really good because you're not going to be paying attention to every stock in the market, right? You have a limited bandwidth, so you can get ideas based on the stocks that pop up on the list. You don't have to do anything, but I think it's good to just see which stocks are rating high in the signals, low in the signals. They could just put them on your radar when you were paying no attention to them. That was kind of like the FedEx story that we covered on Monday. Only reason I knew about it and brought it up was because it was on the homepage. Maybe I'll just keep taking you guys through the app before George joins us back in. Cool app tour. So if you go on the bottom in the second tier, you have a search tab with all of the signals that we have available in the app. So you can kind of see the stocks that rank the highest based on each individual signal, which is pretty cool. But you can also look up any stock you want. And then the middle tab on the bottom is a watch list. So if you want to kind of import your portfolio into Prospero, so you can just scroll through your stocks that you have, or you want to save a stock just so you can look at it quickly, you can bookmark them and they'll show up there for you. Then we have our custom screener, which is the fourth tab, which can be bullish or bearish. It updates based on how George is feeling. And then the last one is the learn section. So if you guys are confused by anything, you can scroll all the way to the bottom and learn about the Prospero app. Hello, George.
Okay. I don't know what the hell I don't know what the hell's going on with that computer. It did just travel with me. Maybe it's just getting a little too old.
Who knows? Technology is fickle. But are you ready to jump into the topics? I think we got some good ones today.
Let's do it.
All right. So the first thing I wanted to talk about was Southwest Airlines, which slashed their guidance for Q2, which I want to kind of cover two parts of that story. One, just a few months ago, I thought we were covering stories about how the summer travel was going to be so bullish. So is this a bad sign for the economy? Southwest is a pretty big airline, cutting their guidance. And then two, is there a rule of thumb for the stock market for companies when they should update their guidance, when they should pre-announce? How do companies and management really go about that?
So the first question is a little more straightforward. I would say, yes, it's definitely concerning. And that's what we're looking at, right? Consumer spending. And I think consumer spending, you want to look at the lower spending levels, because everything we're talking about here is that we could see like an AI boom and the stock market still being okay, even with consumer spending kind of at the lower levels taking a hit. And obviously an airline like Southwest, pretty much like the most budget airline that isn't garbage, as a very, I think that's probably the nicest way you could describe Southwest Airlines. them cutting their guidance is absolutely concerning because that's the manifestation of those spending concerns right there. So I think that's thing one. Thing two is it's really like a style thing in terms of updating your, forecast. It's a style, it's a risk management, there's a lot of stuff. I mean, some of it is the health of the business. Best practices, if you're in a healthy business, is to update as frequently as you see a change of a certain kind of significance, right? We're talking about, you can't be updating every time it's a 1% difference. But, when you start getting into five, we think we might be, 5% higher, or more than that. Like, best practices is to update, but it also matters your certainty. Like, you might be 60, 70% sure of a 5% move. And, you might choose to or not to. That's really a judgment call, even for a healthy company. Now we're talking a perfect world. Healthy company. There's a lot of other nuance. And, there's nuance in two directions, right? If you're a not healthy company, if you're afraid there's going to be a sell-off, if you say report, down revenues, down earnings, update your guidance, you have two choices. You have one choice to just own it. That's a roll of the dice. It's also a roll of the dice to not own it and report way under people think, compound the problem. But as a public company, you have a lot of control to move around risk. And we talked about this in terms of Tesla. And we talked about it in some are saying they basically are recognizing revenues too high. And obviously their sales were down. They really wanted to have revenue as high as it could be because they were already reporting, disappointing revenue. And some said they recognized their, some full self-driving, some of their, recurring revenues in terms of auto park, things like that, for people that weren't necessarily going to buy it or they didn't know yet. And that's always your option as a company. Like, there is a lot of wiggle room in revenue recognition where, like, even if you're recognizing revenue early, there's a lot of wiggle room into making the argument that you did. But let's say you're not using any wiggle room. You're just maybe pushing revenue recognition, which a lot of companies will do. They'll push it earlier if they can, as much as possible. Some won't if they're like healthier. But let's make the argument that they're not pushing it at all. What's the downside to that? Well, if you're aggressive recognizing revenue and eventually you have to pay the piper, right? If they're basically saying all of these people are going to get full self-driving and then they don't, that's just going to increase your losses. And that's going to hurt in two ways. It's going to hurt because it's going to make people trust the revenue you're recognizing less. So they'll grade you down in terms of how they do their models. But it's also going to make you take a hit on your profitability later, because that revenue is going to like come out, basically what you recognized is going to have to come, out later as a loss. So that is definitely something that every company is mindful of. There's a lot of people that are going to push the envelope more on revenue recognition, but it's why, as my mom says, they pay them the big bucks. As a CEO, as a CFO, you have tough decisions to make often, and there's never going to be a low risk alternative to this stuff, especially if your sales are going down, like we mentioned with Tesla. Like, all of the options have some risk to them. It's just a question of what risk you take.
So speaking of Tesla, we got a question in the chat. So we'll roll right into the Rivian story and talk about Tesla a bit. So Rivian was a small cap EV stock that has been hit for a long time, multiple years, but they announced a deal with Volkswagen last night. And then after hours, they were up as much as 50%. I believe they're giving some of it back throughout the day, but I think they're still up quite a bit. The deal was Volkswagen taking a $1 billion stake in them. We have a question from Joseph, which we should cover, I believe, is the lift of Tesla caused by the news on Rivian? So we'll hit on that. And then also, I wanted to kind of throw at you, we've talked about small cap stocks a lot and they've just not been doing well. I wanted to ask you, like, do you think there's more diamonds in the rough like Rivian that are just waiting for that event or news story to kind of catapult them out of the rut that they've been in?
Um, so the first question was, is Rivian going to run more? And then other
No,
stocks?
no, just Joseph is asking if Tesla is moving because of the Rivian news. Um, so do you think that's why Tesla's up today?
Yeah, I mean, but it's weird, right? I mean, I think some of these things are very complicated, where it's just like some of it is like there's some risk, especially like let's talk about like hydrogen cell cars, right? There's some interesting things coming out of there. And Volkswagen kind of making a bet on electric, even though they're going to compete with Tesla. I think that's easing some fears around, electric and kind of like making, I would say, all electric cars go up today. So I would say that part is definitely an interesting aspect to it, and that would be my guess. But on the other hand, obviously Volkswagen Rivian together, that's another serious competitor to Tesla. So I'm not sure how much that kind of makes sense. And then in terms of other diamonds in the rough, like, yeah, I mean, you saw FFAE go up a lot today, and that's kind of like a nothing company right now. You see Lucid going up. Lucid was kind of in a bit of a slump, but people might be looking at them as, hey, that could be an acquisition now. And that's not a bad long, even though it hasn't looked good in our signals for a bit. I'd be interested to see how it's updated. But yeah, I think there's definitely more stuff around that.
So it'll be interesting to see if any small cap stocks can catch their footing going forward. Another story I wanted to cover today was there was a study done about the top streamers out there, and YouTube topped the list at 9.7%. I think it could sometimes get lost within the monster business that Google has. Number two was Netflix, ranked at 7.6%. I wonder if any of our viewers are surprised that YouTube had more market share than Netflix. But another funny kind of aspect of the story was Disney was mentioned about how they kind of might take a piece of YouTube's playbook and add user-generated content into Disney Plus. They didn't say they are, but they said they're thinking about it. So, what do you think about that piece of news in the streaming world and then Disney?
I think this reminds me of the episode in The Office where Ryan is pushing like a Dunder Mifflin website and they're talking about it, and he says that like, oh, like, yeah, the website got infiltrated by pedophiles, but we've got that. That's all going to be fixed in 2.0. And like, I mean, obviously, that just comes to mind with like, you're talking about self-generated content on like a streamer that is like very associated with children's content. Like the Office thing was a joke about how like there's sexual predators all over the internet. So like I really feel like Disney is kind of like asking for that by being like, hey, Disney self-generated like content. Like that's like a lawsuit waiting to happen. And if something like that happened, like, there's a concept in the law of like, did you see this coming? And like, I think it would be kind of hard to argue that that making a streaming Disney, like making user generated content for Disney, wasn't kind of like asking for that to happen a little bit.
Yeah, I agree. I'd be shocked if they actually do it, and if they did do it, if it was ever successful at all. I feel like nobody would switch from YouTube over to Disney Plus, except maybe the people that you mentioned. So we have another story about, and if you guys watch the market news day by day, you probably saw this about a month ago, where there was a glitch in Berkshire Hathaway's share price that they showed up down 99% for just a few minutes, and the stock was traded, and it was just a glitch in the system. But Interactive Brokers gave an update about how they're taking a $48 million loss from that event because people, when the stock was halted, put in trade orders, and some people thought they were buying the stock for $185, and it actually went through a couple times for like $700,000, I guess, on massive portfolios. So I think to cover the costs, Interactive Brokers is kind of trying to smooth over it with those portfolios and those investors. But I had no idea you could actually even like make a trade like when there's a glitch like that. I thought there'd be like zero activity. It's kind of crazy to me that I wish I took advantage of it.
Yeah, well, I mean, you didn't have the what, $700,000 that some people executed at.
Yeah,
At least not that I know of.
I would have been quite negative.
But yeah, I think that that's a pretty funny. I think that that's just like a pretty funny thing that, like, yeah, it's so weird. And like, one of the funny things that that is going on is that you always see like retail people being like, oh, like anything that happens, them being like, oh, it's a sign of like corruption. You're like, blah, blah, blah. Like, I always, like, I kind of have a policy, and this is like funny because people are very, smart on Wall Street, but I'm almost always saying like, it's almost always like more likely incompetence versus malfeasance. That's just like my generally policy in life. So I think that there's some incompetence here, but it's just kind of funny that, like, all the money on the line and these things just keep happening. It shows, I think, above all, like, how complicated technology is and how like complicated it is to keep everything together, because that was just probably some one code glitch, something like that like overwrote, who knows how these things ultimately happen. But yeah, it can happen to everyone. We see it time and time again. And I think if there's one lesson for that is, if you ever see anything weird, like, you should not assume that it's like some opportunity, some signal to you, some sign of corruption. Like, sure, it could be those things, but it's much more likely an error, almost always.
Yeah, I guess even the smartest of us mess up. So even the people who are running Wall Street from time to time make a mistake until the AI runs it completely, I guess. So we have McDonald's launching their $5 meal this week, which we covered back when they announced it. I was reading a story about how this might start a price war within the fast food industry. The food industry was one of the ones that experienced the highest inflation over the past couple of years, and it seems to be reversing now. So I wanted to kind of just ask you about the dynamics of like a price war. Why do companies do it? Who does it really benefit in the end? And I don't know, maybe if it'll help McDonald's or some of the other competitors in the industry.
Yeah, I mean, we've been shorting Wendy's a bunch, and that's one of the ones that I think people have mention as something that could be hurt by this. But yeah, I mean, I think we're definitely going to see, like we talked about with Southwest, we're definitely going to see, some companies, like, I think we're far enough along in this consumer spending, credit problems, whatever, like, whether or not it hurts the economy and how much it does, that's an interesting question that needs to be played out. But I definitely think we're already seeing signs of people tightening up enough that if you don't have a good brand strategy, and I think like, what McDonald's is doing is smart. If you don't have some way to get out in front of it, I think it definitely could, start hurting you. So I think it's an interesting, I think McDonald's only does this if they have some concerns on what's coming through the pipe. And they're seeing data and they're very smart. Like, for those that don't know, like, in terms of franchising, McDonald's is one of the best franchises to have. Like, almost always you'll be clearing $1 million a year from a McDonald's franchise. And like, one of the reasons they're so good is they do so much research on locations, like blocks, like etc. And so, like, which is the opposite of Subway, where there's like a bunch of people who are in like lawsuits with Subway because basically one of the things that they pick on them is that there's no research done, and they'll just let you open a Subway wherever, even if it's not ultimately going to be a profitable Subway. But anyway, McDonald's has been a very smart data science company since before that was a thing. So I'm sure they're rolling this out because they know they're going to need to compete in an increasingly, competitive environment, tight environment for consumer spending at the bottom of our economy.
And so is kind of the thought process for McDonald's, like they're massively big, successful business. They're willing to sacrifice some short-term profitability for long-term market share. Is that kind of what they're going after?
Yeah, I think that's a good way. I think that's a good way to put it. Where it's just like, well, I mean, I think it's short-term profitability for, increased revenue, right? Sometimes those two things are going to be at odds, and especially in something like this, like, yeah, you'll sell more units at less price. So it might actually be, it could, if you do it right, end up being more profitable because you grow your revenue, and even if your margins go down a little bit, you're still more profitable. But I think that, part of what they're trying to address here is just that they're, essentially a company that is going to have to compete for these dollars, and they just want to be smart about it. And part of that's just like the story, right? Of being like, oh, McDonald's cares about me. They're making their prices cheaper when I only see everything else going up. Like, they're reaching out to their consumers. And sometimes just as a brand, that's helpful beyond the economic calculation that we're talking about.
Seems like a very good move for them. We got a chat comment in the chat, update on the soccer match, Georgia-Portugal, 1-0 Georgia. Unfortunately, my Croatia is out of it, so I'm no longer watching, but thank you. We have Greg, who commented on our Disney story, talking about Star Wars maybe, and Marvel could be generated content from users. Interesting note on that. I love how we pushed through a lot of our topics today, so we would be on time still. We have one more before the model portfolio, which is, it kind of snuck up on me. The first half of 2024 in the stock market is ending on Friday. I know sometimes, these big calendar dates can have a large effect on, the big institutions and what they're doing with their money, how they're positioning. What do you think of what this is going to mean for the market? Should people be paying attention to it? Are we going to see a big shift in positioning Friday and Monday? And maybe if you want to make any predictions for the second half, and just what you think about the end of 2024.
Yeah, I think that it's always very smart on a day like Friday that happens to be like the last trading day of the month and the last day of the week, and last day of that half of the month of the week. That's a lot of stuff together. So what I generally plan on doing on days like that is clearing out some of your positions that you're not as sure about, because other people could be having that same thought, that they're not as sure about those positions, and they're afraid that institutions aren't going to do it. So that part I think is very important. But I generally think I look at this similarly to how we talk about dark pool, right? Where it's just like we know that there might be some people moving positions, but we don't necessarily know what. We don't know if that means they're going to be bullish, bearish, what. So like that's why I always default in those situations to lean on your own picks and say like, what am I not sure about, instead of wondering what institutions might not be sure about, because that problem is an impossible problem to tackle, in my opinion. You're much better off focusing on the easier problem of what are you not sure about, because then there might be some overlap, and it's a good time to just kind of like, clean up your portfolio, you might say, of like your lower conviction things. Like just as an easy rule, like take the bottom 20% of your shorts and longs, cut them this week out of each section. I might do the same just for good hygiene and because I'm recommending it. I might just do that. Go ahead and do that tomorrow because I'm not sure I'll have time today.
Yeah, and so I think we can do the switch over to the model portfolio now if you are ready to go. One thing I want to mention, as we're doing kind of you're setting up and whatnot, we don't have to switch over to that. You're already in the lab, so that's good. But we're seeing like a strange lack of movement in the overall markets. Right now, when I have QQQ, S&P, and Dow Jones, they're all within 0.05% of the flat line today. So maybe the institutions are waiting for Friday, and that's when we'll see the volatility. But not a lot of movement in the overall markets today.
Yeah. We talk about this phenomenon sometimes, but like I see it so much where everybody talks about institutions as like, oh, they're colluding, like the institutions are against me, blah, blah, this and that. But like, sometimes they're just looking around. Like institutions do not collude that much. They're in competition. And sometimes they're just like looking around a table like a bunch of people like in the Wild West waiting to see who draws their guns. And they're ready to see when someone draws their guns and who they're pointing at. But yes, I think that's a pretty good, like within the scope of this conversation, people might be saying like, oh, are people gonna like take profits on their tech stuff? Are they gonna load up on like consumer discretionary shorts? Like, are they going to load up on real estate shorts? Are they worried about that? Are they worried about, what would happen if we don't get the cut? I think all of that kind of happens sometimes where you're basically just looking, like it's a lot of them looking around, looking for the first shoe to drop. And like that happens in two ways now, right? It happens in the way of like, people might be doing that, but also you always have to think of the AI of it all, the algorithms. And it's just like they're doing the same thing. Sometimes if people aren't moving, the algorithms aren't moving, you just kind of get stuck in this nothing's moving that much until, one makes a move and then there's some momentum to build off. So yeah, tomorrow might be similar, waiting for Friday, or we might just see this start picking a direction, but definitely worth watching QQQ, SPY, net option sentiment to see if it picks more of a direction. Right now it's like leaning a little bullish, but it's been pretty inconsistent all week. I wouldn't say I've seen a clear direction.
Mm-hmm. Yeah, so I guess it'll be interesting for all our viewers to see what you do with the model portfolio. With that in mind, for the people that stuck around all the way to the end of the stream, thank you. But I think we could get into that, and then hopefully it helps all of our viewers position their own portfolios.
Yep. All right, let's do this. I thought we actually had an absolutely horrendous day, but it turns out that all these splits we don't yet have automated in the portfolio. So the Chipotle split, we had 3 positions.
And it was a 50-1 or whatever, right? So it was a massive change.
Yeah, I thought we took a 5% hit today, and I was like, I don't think I did that bad, but no, I didn't do that bad. Okay, what are we doing here? You want to tell me what's going on with QQQ and SPY and option sentiment?
Yes, sir. So the QQQ is at 54 and the SPY is at 46. So we're starting to see the net option sentiment for QQQ and the SPY diverge. Again, but a bad day for tech, so we have to weigh some information to make our decision.
Is that right? I thought I just looked and it said, oh, no. Energy has been so inconsistent.
It's like we could possibly see a recovery in consumer discretionary looking good in the 1 day, 1 week, and 1 month. Could have gotten hit too hard. But the Southwest report today kind of conflicts that. Energy continues to be frenetic. We're looking mostly to pare down positions. Even in a bad day for tech, we're seeing large cap growth steady, which is a best proxy for AI. Which is a sign for seeing the high QQQ levels.
Is Vive a win right now or a loss?
What is it? VEV?
VEEV. It doesn't matter. It's doing well. We're keeping it. It's in an uptrend. That's a nice net option sentiment for SNCI. Is ANET a win?
I don't know if it's on my end or if it's the model portfolio as a whole, but the long portfolio is like only showing me Chipotle, and I can't pull up anything else.
Oh, I can fix that for you. All right, let me know about ANET.
Thank you. Okay, ANET is a win.
All right.
Just got a comment from Greg saying maybe the presidential debate is what the market is waiting for, which is
Oh,
Thursday.
good thought, Greg. For sure. Let me take another look here. We've got rid of a lot of shorts, so we really just want to add some shorts. Hmm. This one looks very interesting. Let's look at the next net option sentiment trend. All right. I think that's good. Let's see if there's anything on the long side that looks interesting. Anything we don't typically see. What's going on with the option sentiment trend on SNPS?
It's currently at 73. It opened the day at 73 as well. It's going back and forth between 50 and 75 range throughout the trend, kind of bouncing around in there.
We'll take a flyer. Okay. Before I send this right at 4. Yeah, you can get push notifications on Prospero. You should be getting them. If you have them turned on your phone, you can go into settings. And we've been sending out, screeners at least a couple times a week. Sometimes every day. We're experimenting with what the best way to get engagement is. But yeah, there's push notifications now. Any questions? I'm going to press send at 4 and then probably go right into the end of this.
So if anybody's wondering about anything, comment now or forever hold your peace until Monday.
Yeah, it'll be nice to be back on our normal schedule. Oh, sort of.
Normal schedule. I'll be at an alternate location. Maybe I'll tell the chat on Monday where I'm tuning in from.
All right, let me just make sure. Okay. All right, I think we could probably end it.
All right, that's going to wrap it up for today. Best of luck to everyone. Thank you for tuning in. We'll see you back here Monday. Bye, George.